Welcome. This is the December 17th episode of the Trading Pit, where we break down the Bitcoin and crypto markets with human and AI insights. I am your host, Marconi White, and in part one, I'm joined by Benjamin the Whale Hunter and Amit the Range Sniper, who will answer who is going to win the race, which bag holders are going to be happiest this season, Bitcoiners, ETH, or Sol heads. I'm excited to see where Santa's taking some coal and taking some presents. In part two, Ben Lilly will deliver the next issue of the State of the Networks. He's going to see where those flows are heading. Is it ETH, Bitcoin, or Sol for the win? We're going to find out, so stick around for that. But first, it's rapid fire, where I look for hot takes on complex questions. I'm going to be asking these guys to give some answers. Benjamin, Amit, are you guys excited?
Let's go.
Yes. Oh, you hear that energy? Even with the lack of sunshine, these guys haven't seen the sun in a couple of weeks, and they're just surviving. But that's all right. They're going to make it. All right, Amit, you're in the hot seat first. Who will have a better win rate in 2025, you or Jay?
Jay, hands down.
Hands down. What's the how much better? How much better are you thinking?
It'll be touch and go.
It'll be touch and go. You think the AI is going to get a little emotional? It's going to start seeing your win rate creep up and start to take some risky bets?
That's what I think. AI will work to a point, and then it's like any other trade, right? And there is a human element that when it comes to cutting the trades and then saying, this doesn't look good. So AI doesn't see that. AI is either it'll be extremely profitable and it'll lose everything in one trade. But hands down, I think AI, given what we have seen so far from JI specifically, I mean, yeah, it'll be AI.
It's going to crush you. All right.
Yeah,
all right, Benjamin, you got the same question. Are you going to have who's going to have a better win rate, you or Jay, in 2025?
If I'm able to spend 365 days on the desk, I think I'll beat it. But if I can't, I think it will beat me.
Okay. Is that the plan? Have you told your wife you'll see her in 2026 and you're going to be chained to that desk 365, 24/7?
My friend, you need to ask Benjamin, right? In last 3 months, how much time it has spent on the desk?
Great question. Hey, yeah. How much time have you spent, Benjamin?
Honestly, not much.
It's one of these things he could tell us, but then he'd have to kill us and everyone on the show would die instantly. That's a terrible thing.
That's a good one.
Yeah. Okay.
That gives you the win rate of JI.
There you go. That's one of the reasons we love Jay. All right, Amit, next question. The 2025 bull market, is it going to end in a whimper or does it end in a bubble?
I think it'll be a bubble for sure.
Be a bubble? Is it going to look like 2017 or 2021?
I think it will be 2017 because animal instincts are just starting and we see the price is already pumping like on any small whims and fancies, price starts to move. And there is, again, the whole environment is there for those animal instincts to come out. And people have been contained for a couple of years now. So
the animal instincts calling on our inner cans. I love that. Benjamin, same question to you. Does this end in a whimper or a bubble?
I think it ends up in a bubble, but I feel the bubble could last longer this time.
Oh, well, I don't care how long it lasts. I just want to know, is it a bubble? I want to see something explode. Look like.
I just want it to last longer,
You want this to go on forever. You want the Christmas of Christmas, the extended season.
I just want it to last longer. It's like, get a 4-month summer like we had this year, and then, grind up again, then 4-month summer, grind up again. Just like Q4 and Q1 always pump, Q2 and Q3 always dump. That's perfect setting,
So cue it up, Santa. You know what Benjamin wants for Christmas. It's definitely not some coal. All right, well then my question then for you, Benjamin, the biggest bubble will come from TradFi leverage that's going into something like MicroStrategy or DeFi leverage going into stables such as Athena? Or is it too early to tell?
It is too early to tell, but I think the actual bubble, I don't think we know it yet.
Okay. We're just starting to get familiar with this. This is our first date with the bubble. Amit, do you have any opinions on where this bubble might come from?
No, not at the moment. Too early to say.
Too early to say. All right. So for all those out there wondering if we're near the end, we're not near the end of this, and we're looking for a bubble and we don't know where it's coming from.
I mean, if you think about it, last cycle, nobody thought that FTX would be the bubble, right?
Yep.
Or Celsius or any of those centralized platforms. Those were always revered as safe routes. And the bubble was supposed to come from Tether or Binance. But, like for all the distrust the Western media used to have on the Asian founders, it turned out to be the opposite, right? So we do not know whether these predictions will stick around. Like they've always continued to surprise us. So we have to wait and see.
If there's anything we should have learned from 2021, do not trust a guy who looks like he hasn't had a shower in 7 years and with that kind of haircut. So that's what I'm doing.
In the industry, that looks like that so far. So
not a good thing. Not a good thing. All right, Ahmed, I want to ask you this last question before we get into the charts. As a trader who's looking for swing trades, how important is it to you to even look at the bubbles? Do the bubbles matter? Yes or no?
No.
Not at all.
Nope.
He sleeps, folks. He sleeps at night, moisturized and happy, not caring a word at all for these bubbles. So maybe you can think about that as well. I definitely suggest you join us on the Trading Pit, because as these bubbles start to expand, we get a little bit closer to them. Even if the trader Ahmed doesn't care about them, we'll still be talking about them, seeing if it's something that we need to be concerned with, and maybe take some chips off the table. But for now, this is definitely not the time. Now is the time to be in the market. We keep on talking about that. And if you weren't in the market, you were expecting some kind of pullback down to 90K. You got blown out this last week as Bitcoin was up 10%, Ethereum up 8%, even Solana, which is definitely the last of the pack, is up 5%. As I checked this morning, Bitcoin's sitting at 107,000, Ethereum at 4,000, and Solana at 224. And we just had monster flows coming into these ETFs. I was looking at Bitcoin this morning, 36 billion year to date, and that includes what's gone out of the grayscale. And the last flow came in was 463 million. I mean, we've just had so many days of these 9 figures coming in. It just kind of blows you away. Ethereum, though, is also catching up. It's got about 2.3 billion in those flows that have now come in, and it's doing about 51 million yesterday. So really strong flows coming in. We got some good price action, and if you're out of the market, you missed all that good excitement. So let's start off with Bitcoin. Ahmed, maybe I'll start with you. What are you looking at here? And kind of walk us through what we saw from last week. I mean, again, we were talking about maybe there was going to be a pullback, some really nice entries, kind of sitting in the low 90s range. The market hasn't given that. And I feel like we're pumping higher as we're heading into the end of the month. What does the chart look like? What are you looking for? And first question, were you a little bit surprised with Bitcoin's resiliency?
A little bit, yes. I mean, but last time when we were discussing, right, this was the point where we were discussing this was the point Tuesday, right? This is the point where we were discussing if it comes to like 95K, then if it holds 95K, then it will be a good trade, because there was a lot of support on the order book for 95K. And that's exactly what happened. From that point onwards, this was the trade we talked about that day. If 95 holds, you can start entering from here and then go to Monday high. So Monday high was sitting somewhere previous week high. This was the Monday high last time. So it just that up. So again, order book's playing out, supports are playing out. Now it is sitting at Monday high again. So yeah, hard to say. But they played out the way it should. But correction, yeah, it's not going to come down under 100K. That's what it looks like.
Well, when you say that, and I know you're looking more from a near term, so definitely not this week. You're not expecting any returns to lower than 100K. Based on how this has moved up over the next quarter, would you expect us to come back, retest some levels in this range to kind of solidify support?
I think it has tried to come down to 95. I mean, if you look on the chart, right, 95, it's on a higher time frame on 12 hours, right? It's been tested many times, and it held up every single time. So I don't think it's coming down to 95. Even if we get 900K now, that's basically, if we can get 99, 100K, that's a good entry. So yeah, that's what I'm looking for. I mean, I'm not expecting 90K, not expecting 95K anymore, because the way it held up and the way it ran from 95K, if we get 100K, good entry.
Okay. Well, I mean, its strength is truly phenomenal. I know we also talked a little bit offline, at least in some of the chat rooms, about the open interest. I think was reset. Although I looked this morning, it still looked pretty strong. Maybe the funding rates had kind of come down as well. Benjamin, I want to get your take on what you're seeing from a Bitcoin perspective. Have you noticed any changes, perhaps on the whale activity? Are any of those whales starting to come in? Maybe start to show that they're starting to do some accumulation? Are they still looking for a pullback, or maybe they've just gone dormant and we're no longer looking at that anymore?
No, I think that has basically gone dormant. I think that whole model is not so accurate anymore.
Okay.
So of course we have those individual wallets who we track, and those cluster of wallets, of course, always have some type of impact, but it is not something that is instantaneous to say at the moment. And like, it's good that these wallets are dormant. The market impacting wallets being dormant is pretty good, because it means that the local reactions that we see at resistances or whatever it is, it does not come from them. It's just pure market inefficiency, and that is trying to price that in. And if we talk about the big whales, or the old whales, I don't think honestly much of activity is happening. It's all getting much more centralized when it comes to the activity. It's all being worked out with a centralized set of OTC dealers and prime brokerages and custodians right now. So I believe sooner or later it will get much harder to basically understand the dumping dynamics in Bitcoin. To be honest, it wouldn't even matter at some point, and it would basically be the Coinbase premium that we have seen evidently in the past months as well, being the contributing factor, and then our Lord Savior Sailor. So, I think it's good in a way, right? Because the number of parameters that used to matter, or that was required in order to track the potential of Bitcoin, has come down widely. If I take a step back as an analyst, if I take a step back as a programmer or as a trader, and then start thinking about Bitcoin now, and irrespective of the bull market, I feel it has gotten much more tamed, and quite soon it would be like a lot of TradFi assets, where you can even simply take your pivot levels or RSI based bands, and you will still do well, because it gets really tamed to those type of traditional algorithms basically playing around, traditional dates playing around, like Fed and CPI and all those metrics basically start defining a lot of things. If repo rate comes down, or TGA basically happens, like a lot of those factors will start to determine. And if you are seeing a good bid pressure on a local time frame, and if you start buying, the odds are that you will lose less often, way less often, compared to earlier, where you had to do 100 metrics and try to figure out what's going to happen. So I think it gets much simplified.
So let me ask a question about that simplification. A lot of great work has been done to try and build the infrastructure to be able to understand the on-chain movements. And we were talking about whales and sort of this accumulation pattern. You're suggesting that that's going to start going away. It already has started to change. You got prime brokerages, which are playing a larger role. Some of these centralized entities are starting to play a larger role. Is on-chain analysis, at least from a price perspective, going to just really not have the same impact? Are you just kind of taking away? Because what you're saying is really just from a pure technical analysis perspective, it sounds like you're going to still be able to do trades. There's going to be enough vol, but you're not going to necessarily, you're going to be relying more on traditional technical analysis more to look for some of those trades.
Let me give you an example if you want, like from the TradFi perspective, on something that recently I did. So I can tell you from personal experience itself, what happened. So it's obvious, like a lot of people know that we work with prime brokerages across the world in different countries and so on. One of the prime brokerages that we work with basically, asked us if we can lend them Bitcoin. So the question I asked was like, where does this Bitcoin go to? So the Bitcoin goes to other funds who basically want to keep Bitcoin in their balance sheet, but there is either shortage in Bitcoin, or actually it is more expensive to acquire Bitcoin rather than just giving, like borrow it and just give you yields. Right now, what happens is that now this fund is basically borrowing the Bitcoin from me, and they are basically keeping it in their balance sheet, which is held up in a custodian who is still a prime brokerage. Okay, so now I have Bitcoin, which I have lent it to him, and he has Bitcoin in his balance sheet. All right. Now, technically speaking, he has 10,000 Bitcoin. I have 10,000 Bitcoin, which I have lent it to someone. All right.
Yep.
Now, I don't know if you call it double counting or not. It's not really double counting because I cannot do anything with my Bitcoin because I've lent it already, right? So it's just change of custodianship. But if you think about it, there's a, like huge purchase that has happened in a way. Now, a lot of those type of movements are happening in the, centralized space. A lot.
Interesting.
Because the offer I had was 4.5% annual yields on Bitcoin. So that is how much there is a supply shock right now. Because exchanges are also bleeding Bitcoin. And, like what has gone out is not returning back. On top of which, if you take most of the international exchanges, they've been getting much more regulated. So they've been alienating a lot of users. Like today morning, I came to know that Bybit is restricting a lot of EU users because they're going to apply for the MiCA license. Now, this is just going to spread to more and more exchanges. And a lot of countries' users are basically going to be isolated, and they're basically not going to keep the funds in the exchanges. So, but the contrary point over here is that OTC dealers or market makers still have to deal with exchanges to buy Bitcoin. So now where are they going to buy it from if users who have Bitcoin are leaving the exchange, and exchanges also have much lesser supply? So you can already visualize what happens to the supply shock, right? Yeah. And on top of which, basis trade has not yet picked up. Basis trade, and then I say the premiums are much lesser still. Open interest has not gone parabolic, in native contract terms. Funding is still muted. Price is slowly grinding up. No excitement, nothing. It's just boredom. So we're all trying to figure out if it has topped out or not. A lot of people are saying, well, this is too expensive for Bitcoin, But who cares? Who knows? Like a few years ago, they said 10,000 is a lot for Bitcoin. Now 100,000 is a lot for Bitcoin.
So yeah. So to summarize, because I think I was asking about on-chain, but you painted a different picture, which is actually very illuminating, that you've got a lot of demand. I mean, I mentioned this sort of number of the ETFs that are coming in, 36 billion to date, 463 million that just happened last night. They actually have to purchase Bitcoin, right? So those ETF funds actually have to accumulate it. MicroStrategy is actually accumulating Bitcoin, now has, the latest data has about 2% of the overall supply. Then you have all the exchanges, and it's really, let's call it out. It's going to be the largest exchanges out there from a Coinbase, a Bybit, and Binance kind of view that have Bitcoin that is in their, they're basically custodians for it. It's a little bit different of an arrangement, but let's just go with that. They're custodians of that Bitcoin, and they are maybe able to do, make some arrangements to loan that out at 4.5%, which is no joke to these other funds that need it to have it on their balance sheet. That's changing. That's going away. It's setting up for a very strong supply shock as there's less Bitcoin in the system, and the funding rates continue to be, these funds maybe at some point have to actually acquire that Bitcoin rather than just being able to borrow it.
Those funds, yes, like ETFs, yes, I agree, but it's not the case for a lot of other funds. Like they can basically borrow it and keep it in their balance sheet. That's much cheaper for them to do it, as long as they have the collateral. It's not uncollateralized. It's all collateralized.
Yeah.
But this is how the game is. Like this is how it works in the TradFi space. So a lot of those mechanics are coming into picture. So that's what I'm saying. Like the traditional way of purchasing Bitcoin and keeping it in a prime brokerage or in a Fireblocks or in your Exodus wallet or in your MetaMask wallet, that's going away. That's slowly shifting. So I don't really have to, buy it and hold it in my wallet for, Panda Terminal or Glassnode to come and track it and say that, hey, a whale has bought 10,000 Bitcoin.
Right.
That may not ever happen again, while there are whales who are buying 100,000, 200,000 Bitcoin. We may not know it at all. The only way to basically get a glimpse of it would be based on what we are seeing in toxic order flows and how we are seeing, price movements and premiums in certain time frames, such as, let's say, New York opens and Friday closes, options expiry period. So that's what I'm saying. I believe a lot of things are getting much more simplified. I do not know if it is intentional to make it easier for investors, or it's just what happens when an asset matures. I've never lived long enough to know that an asset matures or not. How does when an asset matures, right? I was not born and I was born, but I was not trading Tesla on day one. So I don't know.
Good to know you were born and not hatched. Okay.
Yeah.
So, okay.
I wish I was hashed. I would be much more perfect, That would have been nice.
We never know. Maybe there's a chance we could try that on the next round. Okay, so the whale wallets is not something that we can get as much insight right now. Maybe we'll look back to it, maybe come Q1, see if something's changed. But it sounds like the movement is moving. The insights are going to be moving more towards this opaque structure, which is through these prime brokerages and other places. So we just have to be kind of aware of that. What's your take? Well, we can kind of wrap up this from a Bitcoin perspective. What's your take on the price action you've seen? Before we do wrap that up, I want to, you mentioned that Jay was able to take some trades off chain, and it was able to do some scalping. I guess I want to ask you the question from that point of view. As this maturity happens to Bitcoin, are there still opportunities to be trading on Bitcoin? Is it going to really move more of the trading activity, which I think has been happening for years already, moving more into some of the other assets, the other L1s, maybe further down the risk curve, just because there's going to be more volatility, or there's still going to be really good opportunities to be trading on Bitcoin? You're just going to have to move more into the AI agents like Jay.
Yeah. So basically, my stand has always been simple. There are two types of trading which will continue to exist. One is on the centralized side, and the other is on the on-chain side. If you are someone who is basically able to access or centralized side, then you should basically keep your funds on an exchange like Bybit as collateral and basically trade perps on top of it, because you'll be able to perform much better. You'll be able to generate more USDT returns, which you can once again convert into BTC or whatever. Now, what you do is you are converting your BTC into a liquidity mining machine, right? Because the collateral value is going to go up, as long as TradFi wants it, as long as seller is able to buy, crazy amount of Bitcoin, and if strategic reserve and a lot of those fundamentals play out, then we don't know where price discovery is going to go. We are in pure discovery, and market is still muted on Bitcoin if you think about it. So if that is the case, if I decide to buy it over here, the only way I should look at it is hey, if I'm buying it here, should I sell it at 130 and should I buy it back at 95? Just don't bother. If you're selling it at 130, don't get back again. Wait for the bear market. But if you are buying it over here with the goal, I think this is going to be valued much higher in 5 years period, then what you have to do is on the centralized side, you're using it as collateral. But let's say you don't have access to centralized side and you're just going to be doing on-chain, in which case you can basically take a small loan on Aave or Compound or somewhere against your BTC and get those assets allocated with JAI and on the on-chain side with J.J Labs, and basically just let it run, and it will just slowly keep on compounding, and you'll be getting the USDC yields, which you can basically park it back into your Aave loan, and it's a win-win situation. I would go about it in that way rather than use leverage, but use it wisely. Do not use it for degeneracy. You can always do a 1x to 2x loan, even on chain, without affecting your liquidation, without taking a huge risk. So it's this was something even I was telling one of the influencers that we, like often chat with, and he comes from the former Glassnode space and so on. And he always used to worry about, like, I'm fully allocated to BTC. I'm not able to get exposure to virtual or agents, AI agents, and all that infra or memes and that. And then he made the mistake of buying those tokens while BTC was breaking out. So it's like rotation is a tough game. So why do you sell your high liquid asset, which basically becomes a liquidity machine for future, instead of collateralizing it, whether it is on chain or uncentralized, and using it as a way to basically make more gains, get your exposure to other ecosystems? That is a smarter play, but very few do it.
Yeah, well, it's a little bit of a mind shift for a lot of people. If you're really focused on the long term here, you're going to shift how your focus. You're going to be thinking a multi-cycle, and that's going to prepare you to make a lot more money over time in a more risk-adjusted manner. Which, we actually have a video coming out there soonish, talking about some of those principles and being able to apply that. So for all those out there, just to summarize, you got two different options in which, he's thinking about being able to use J to maximize your performance, both from a off-chain perspective, which is going to become more difficult to actually get access to. And many have already said, listen, the centralized exchange risk is a little bit too much for me, or the on-chain version, which is going to continue to grow as more people are looking for ways to which they can use their collateral. But they don't want to access these exchanges, or they can't use these exchanges. So there's going to be a lot of options there. It just requires you to be a little bit more time indifferent, right? Have a longer horizon, but you should have that anyways, and be thinking about this not as a get rich scheme, but more as a way to maximize your wealth. So, okay. So I think from a Bitcoin perspective, we talked through the price. We've talked through a lot of the changes. A lot of this is more of behind the scenes stuff. You're really not going to be going to get. It's not going to be published in reports. It's going to be difficult to analyze, but you get someone who's on the inside like Benjamin, you can get a deeper idea of what's happening behind the scenes. Hopefully the supply shock is going to lead to something pretty massive. At some point, I think, if you hear his Christmas list, we've got a massive spike Q1, Q2. We see a slowdown in the summer, and we have another one at the end of next year. And everyone's Christmas 2025 is the best they've ever had. All right, let's move on. I want to bring up Ethereum. Amit, you still with us? You've been quiet in the corner. Maybe you're writing your cards to Santa asking for some more gifts.
Yeah, that's how I was making my Christmas list.
I think at the top of the list is give me some sun. Give me some sun. I want some sun.
That's not coming. That's for sure. Send up on that. So next best thing is Ethereum price.
Okay.
6K.
All right. Okay. Well, okay. I want to ask for first is let's talk a little bit about these price targets, and I want to get your guys' take on rotation and really get an answer which one is going to outperform Ethereum or Solana or Bitcoin over the next 30 days as an example. But let's start off. Let's go through some of the price range, the price action. I think a lot of people feel like Ethereum, after being the most hated asset, is really primed to rip higher. What's your take here on the chart that we're looking at?
So I got Ethereum open at the moment. So again, the same trade that we have last week. This was around Tuesday. Yep. And then we were saying if it goes to 3,400, that will be a good price to pick up. And this was the low. So 3,475 ripped all the way back up to 4,000. So had few trades go in there. So that was a good setup. Now looking at the price, it's as long as, this is what I was trying to get to gauge. If it stays above 4K, then there's a chance it will rip up to 4,600. But at the moment, right, from the last 2 days or last couple of weeks, this looks like a double top to me. It's trying to get up above 4K, but every time it goes, it gets smacked down. So if it goes, so this is how I would trade Ethereum, right? If it goes above 4K, then there is a trade, or basically, this is my lab, 420, 450. After 4050, 4050, I'll take a trade riding up to 4,600. But ideal scenario is basically, given this is again Tuesday, and Tuesdays are generally red and the rest of the week being green. So this is the range I would go for at least. So 5% range I would try to ladder in.
Okay. So your expectation is we're probably going to revisit some lower levels before Ethereum's able to break out.
Yeah. But that's what it is showing like on the chart, right? I mean, you can see it's struggling to stay above 4K. Yesterday, when it started to rip up on Monday morning, right? I thought, yeah, this is going to make high today, 4,100. It went, then came smack back down. So it didn't make a high. It was more looked like a liquidity grab. Looking on the order flow side, that's what it looked like. All the walls were there and they got taken out and then smack back in. So it'll be a good play going back in 5% and picking up and running up from there. But worst case scenario is your monthly open. This is your worst case scenario, 3,700, but it won't go below 3,700.
Okay, so once we get through with Solana, we'll talk about that trade setup in a moment. Then I want to bring it back to you guys, talk a little bit about the rotation and where people are going to be sitting. So that's a good setup for Ethereum. Looks like we're going to see a retest, most likely. Some good entries for all those traders who are out there. Let's get into Solana.
Solana is very, very, very muted. Don't know what the whole ecosystem is like dead. It has become Ethereum now. To be honest,
it has become Ethereum. Oh, that's like one of the worst insults someone in crypto Twitter could come up to. Okay, it's you look like Ethereum. All right.
But I mean, I think I'll do some chart comparisons and going backwards when we were talking about Ethereum as well. I think this chart looks something similar to Ethereum when Solana was running and Ethereum was dead. And now it might be a rotation because the whole ecosystem on Solana, like Popcat, WIF, anything that has to do with Solana, it's just getting back down. It's not moving. So Solana, I mean, it's hard to trade, but 200 is a good place to take a punt. Basically, again, going back to what Benjamin was saying, if you want to bet on Solana, 3 trades, 220, 200, 180, and see how it plays out. So that bet is still in. I mean, it's at the moment it's nowhere land. It's sitting at Monday mid, showing a massive wick up. That means it's been sold off. There is no interest in running up. So who knows?
What? Okay, so Solana's got a bid. You kind of again continue to have these same points.
You can take a trade. There is a small trade, but I won't. Basically, yeah, you can go in a 9%. You can play in the 8%, 7% range here. Ideally, it will be around $200. Yeah, you can from $220 to $200. You can ladder in where most of your risk sits in this range. You don't want to play on the top. This is where you want your risk should be.
Okay.
Goes below. Let's say if it breaks below 200, you can just cut the trade. Invalidations are very clear here.
Yeah. Okay. Well, I don't think it could be any clearer right now. Well, this brings me to my last question. You got your trade that you can make on Solana, which seems to have lost some life. And for those who have been listening to Ben Lilly's flow report, you'll know that since Pump.Fun has kind of gone out, we're still waiting for a new catalyst for Solana to come in. It could be explaining some of what we're seeing here, which is sort of this deadness in the ecosystem. Let's see when it's going to come back. Obviously, what do you guys think in terms of the winner for the next 30 days? Is it going to be Bitcoin? Is it going to be Ethereum? Is it going to be Solana? Who are the as I say that, it looks like Bitcoin is crossing into 108,000, still showing signs of life and not slowing down. Which of the three do you think is going to be the winner there, Amit?
I think it'll be Ethereum.
Ethereum for the gold. And then who's got the silver?
BTC.
BTC, and then Solana. Is Solana even going to get the bronze, or is Ripple going to take that?
Volume-wise, XRP is stealing the show at the moment.
Yep.
It's up 7.8% today compared to Solana. So Solana is losing to XRP at the moment. So don't know.
That's probably the second best insult you can make on Twitter. You lost to XRP. Okay.
Exactly. Today is on around up by 7%.
Yeah.
And Sol is very Sol. I mean, if you look in the chart, don't know where it is. It's just dead somewhere in the corner. Can't even find it.
Yeah. Benjamin, I want to bring you up here. Ask the same question. If you're forced to make a decision, what do you think is going to be the winner over the next 30 days? Is it going to be the ETH holder, the Bitcoin holder, or the Solana holder?
Okay, so here's what I think probably happens. I think Bitcoin tops out at somewhere around 120 to 130K. So the question is, as much as we hate the other tokens, will the other tokens do a better lagged play, or it's just going to be Bitcoin performing? And we know the answer, right? So if we take ETH, we take Solana, both are below all-time high, right? Then previous all-time high and this cycle all-time high, whatever it is. So it's quite obvious they're all suppressed, they're all taking a hit because money flow is still into BTC. But that's not something that keeps continuing, right? And when that takes a break at some point, you will see that ETH and Solana basically decompresses and goes up crazy. So it may happen in the next 10 days, or maybe it happens in March. I do not know when, but that is going to be an obvious push that happens. And I don't see any reason why that doesn't happen, right? Because money always rotates. It gets bored at some point. So given that, now, if I think about trading Bitcoin, and if I think like, well, should I open longs here because it's going up like 0.5% a day? And then I think like, nah, it's not so interesting because I can make that 15 days play in just one trade on ETH or one trade on Solana. So as a trader, BTC is not attractive, but as a liquidity provider or building up a liquidity machine, that is very attractive. BTC will always remain attractive. So it's about the perspective.
Okay. Way to come back with some good way to reframe the thinking, reframe the question. Okay, so
think about it, right? BTC and Solana both have made the all-time high. ETH has. So ETH will make an all-time high before anything else happens.
Okay. All right. Well, there you have it. If you're asking where you should be rotating, I definitely suggest you check out the video from Ben Lilly that he published about a year ago. Talks about the rotation, thinking about 5 different trades throughout the cycle. May get an opportunity to make a couple of rotations going into 2025, especially if we get the Merry Christmas coming all the way back with 2 really strong runs in Q1 and Q4. We'll have to see. All right. Well, let's throw on a couple other tokens on the chart before we wrap up and move to the order flow side of the conversation. We got a question here about FTM coming in from, I want to say, Herschel. Apologies, my glasses are fogging up and my body seems to be moving in weird ways. What does FTM look like? Is there a trade?
Yep.
When alt season happens at some point, FTM will be one of the layer ones which will see a rotation. That's all. That's as much as it goes. So trying to figure out whether it is a good play now, I don't think it has much of reasoning at all. Like, Amit, don't even open up the chart.
Don't even open up the chart. You can't have that information. We got government Benjamin coming in and saying it's fake news, even asking about it.
I'm just saying it's not worth it. Like, if it is gaining mind share and you're seeing like a 5-6% pump today, right, on FTM, and if there is a mind share on socially or on wallet side, it makes some sense. Otherwise, like these mid cap and low cap layer ones or the new layer ones that's popping up, if they're not having mind share, don't spend time on a daily basis to just think about, okay, I like FTM because I like Andre, and I made money on EFI in the last cycle, so I think FTM will do well. Just don't bother, because it doesn't matter. All layer ones will see an inflow at some point. It will rotate. That is always the game. Layer one is always the game. L2s will see some sunshine, but at the end, it is like mothership. All layer ones are like mothership. They will always be the ultimate winners as a result of all the ecosystem projects. So it will find its own rotation space at some point. It will run for like 6 weeks nonstop, and then basically do a Burj Khalifa. So if you're allocating, just buy some spot on FTM, just leave it as staking in Sonic or something, or just don't bother trading it. Like, there's no point trying to trade perps unless you have a significant alpha.
Fair enough. Amit, is there anything to add to that analysis?
I mean, that analysis is true, but I don't go into that analysis. I just look at the chart that is in front of me. So I would take a trade on FTM. I mean, I would go by starting looking at the volume, what the volume looks like. Volume looks okay. Percentage-wise, it's just 1% move. Yeah, it's not highly liquid at the moment. So it's not, you won't go in 10-20% of your portfolio. It's like 2 or 3% you can throw in for 15%, because there is a good chance of 22% gain here. So you can imagine because on the Monday range and the previous month high, right? So if this is the good play from Monday mid to last pivot point, that's 15% down, and from there ladder it all up or ladder down, and then you're looking at on a weekly side. If you look at it, that's the next play where it will basically try to get to 164. So there is nothing, not much legs to it. I won't go in going big on this trade, but yeah, as Benjamin is saying, there is no narrative here.
Okay. Well, we're not going to get into the narrative. We don't have that information there. I like the framing for Benjamin as someone who likes who can't spend as much time at the trade desk. Okay, let's get one more here for all the audience because they showed up and we love seeing them here. What about Link, which seems to have strong bull?
Yeah, I think Link will do fine. Just don't try to time it. Like 6 months ago, we told, what is our thesis on Link, and I still stick to it. I still think that it will see higher prices. It's still the best of oracles. It's still being used by everyone. So if you ask for utility of Link, yeah, I mean, it's as much as any other, ERC20 token having a utility right now, or, Solana token having a utility. So apart from layer one, everything is basically a questionable utility. There's not much to basically say that, hey, I have a better utility and you don't. Everything is the same. But is the underlying product working fine? Is it being used by a lot of people? Is it generating revenues? And is it having a worthy competitor? Yeah. And I think Chainlink still doesn't have a worthy competitor. I know a lot of people push Pith, but I've tried it and I'm not so satisfied with oracles. So I believe Chainlink is still the backbone of most of exchanges, most of the DeFi feeds, and President-elect's project themselves basically use it and buy it and hold it. Setting up an example, and almost a lot of those copy traders from the West are probably going to follow suit. So the thesis still remains. I think we see not. Okay,
there's the belief in what Link's going to do, and I would say, just as a casual observer who has zero exposure to Link, it feels like it's already won the race on that, on what it's trying to do. But not to say it still has technical hurdles and other capabilities it's going to want to close, but it definitely seems to be definitely at the front of that race. I guess, Amit, you've got a chart up here. What are you looking for Link? As I said, we came across, it has a strong bull indication. Is there still a trade?
Yeah, it is a trade. So, I mean, it's sitting at Monday low. If Monday low is held, I can start a trade on Link here, actually. This is a 7% range. I can ladder down. And then from there, basically, just looking at your peaks and troughs. So it's basically another 30-35% trade. You can actually trade this. So from 28 to 26, or rather, I mean, you can ladder it down to 24 and then let it fill for 20% of your 25% of your portfolio. And then if it breaks below, you can just cut it here. And from that point onwards, you're looking to get into 37.
Looks like a pretty good setup. Not bad, not bad. I guess it all depends on how hot Bitcoin's running and if that allows anything else in the ecosystem to do okay.
Yeah.
Continues to have a strong run, I guess, up at 108,000. All right, guys. Well, I think that's a pretty good set of trades for everybody. We got at least answered somebody trade in there. I want to say thank you for showing up, giving us some of the background story of what's happening in the ecosystem, as well as some trades. But guys, stick around because next we have Ben Lilly coming up to do the trade report, or the flow report. Flow report. I got to get that right. Lack of sleep. My son's keeping me up. But thanks, gentlemen. We will see you next week. Ben Lilly, are you with us?
It's a 10-4.
All right. Are you are you asking the same thing for Christmas as these last two guys?
What are they asking for?
That's a good question. I think I just kind of just assumed that there was a couple of requests for. Well, no, that's right. Benjamin's asking for a really hot Q1, kind of Q2, cool summer, and then a really hot Q4.
Wow, that's like ultra specific. I think just number go up is probably just, let's simplify it. And if it goes up, we're good to go. But I would prefer it to be a little bit more sequential, right? Give time for rotations. Give time to compound.
Give time for rotations. Before we get into the flow report, I do want to ask you. You published a video a year ago, and I think it was just about a year ago that we put the video out there. I think it's 5 trades. We'll try and link it here in the description. But have you been surprised how this market's played out and how close that video's played out in terms of ways in which people can rotate through the ecosystem? Do you think it's too early to tell? Because we were talking about offline. It feels like that is the strategy. That is the way to be thinking about this. Not trying to over trade the space, but really try and think more about how the flows will rotate over time.
I have been surprised a little bit of how well it's done. And if anything, it's almost like Bitcoin dominance chart, like the way in which it has just repeated itself over and over has been remarkable to date. And the fact that I think just, like a month ago, you've seen the dominance chart top out. And it doesn't look like it's going to seek a new high on that chart. And it's just going to kind of, I don't want to say lose market cap relative to the rest of crypto, because that just sounds kind of negative in some sense. But it's just, I think there's just going to be so much capital flowing that opportunities are going to be found further down the risk curve. And that's where the capital is going to go, right? Nothing against, Bitcoin returns. I think things that Benjamin was saying, using Bitcoin as sort of a liquidity machine, right? Like that's, like, think of it that way, right? You're using it to go ahead and seek all these other avenues and opportunities out. And so just let the market just kind of float your liquidity higher, seek those opportunities out as everybody kind of goes down that risk curve. But yeah, I mean, it's been great. I think looking back on it, if I'm going to update that for the next cycle, the main thing I'm going to look at is a pre-halving sort of second phase of the market where, Bitcoin sort of comes to life, which is what we saw, on the heels of FTX in 2023. And Bitcoin rose and everything else kind of stayed steady and stagnant for a short period of time. And it just sucked all that liquidity up. And then where did it go next? It went right into memes. Now, was that a result of kind of Gensler era, regulatory just overreach where nobody could do anything? So nobody was really looking at anything else because it was almost like, as Murad said, it was just vaporware essentially being peddled by VCs, right? So what's the difference between that and a meme token? I think that just created that environment. Do I see that happening down the road? I really don't. I think you're going to have a lot of this kind of refreshed token design coming to market as kind of this new regulatory regime comes in, both on the CFTC side and the SEC, especially. Almost clean house on the SEC if Caroline Crenshaw does not get nominated this week. I think tomorrow. I think the Democrats are going to give that a go. But I mean, it's just a clean slate here. So I don't see that kind of vaporware space being taken up by memes next time around in kind of that pre-halving environment where, Solana also really won mind share as well during that time frame. And then in the cycle before, trying to think what won mind share then, but Ethereum didn't do that great. It did it kind of the cycle before, which was back when ICO started to come about. You kind of had the first on-chain, what was Ether Delta, I believe was the exchange that was the first use case for ETH in a sense on chain. But yeah, I mean, it's been holding relatively true here, and especially in the post-halving where Bitcoin just completely dominated the market. And then I think you see Ethereum starting to rear its head right now. And that's going to take place probably for the next few weeks, month, or a couple months. And then as like we kind of hit like the halfway point, you'll start to slowly see that rotation likely into either kind of alt L1s or possibly some, smaller sector tokens like DeFi, and maybe DePIN has a new life And then obviously the infrastructure surrounding AI agents, I think could be really big. But yeah, I mean, it's holding true. And I think, memes will have that last say in the market and never be like, I told you so, right? Like, it's not over. It's here. We're partying, right? It's 2 a.m. Great decisions never get made after midnight, but then the party will be over.
Well, when the party's over, it's done. We pack it up for a few months, lick our wounds during the bear, and then we get ready to ride it again every 4 years. That's the best part. We know it's coming back. Okay, well let's get into the flows. Let's actually see what's happening. Should we start? I think last week we did Bitcoin, Ethereum, then Solana. Do we want to start and run the same way?
Sure. Let's do that. And we did say Bitcoin, Ethereum, and Solana, right?
Correct.
Not just assuming that's what you said. Okay, good. Let me zoom in a little bit. Bitcoin, like, it's just amazing.
Are we looking at Bitcoin, or this looks like Ethereum?
I did not share what I wanted to share. I was trying to drum up, all of the, energy and attention to this amazing, immaculate table I'm going to show everybody. Don't underestimate the amount of hours that went into making this format. So
you have no idea what happens behind the scene, folks. It is
boom
behind those scary eyes. There's a lot of genius at play.
Look at all those man hours at work right there.
That is what someone would call a sexy chart. Sexy table. I guess we should use the right nerds. Okay, what are we looking at here exactly? BTC flows.
All right, so we look at where Bitcoin essentially went over the last week, right? As far as like what we can account for, and the three main, entities or kind of areas in which we saw Bitcoin flow are ETFs, Babylon, which is sort of this liquid restaking narrative that's taking place on Bitcoin and sort of creating this world of DeFi over there, which has been pretty amazing to watch. And then MicroStrategy. And look at those numbers. I mean, that's 7 billion worth of Bitcoin getting flown into these three different entities or kind of areas. 70,000 Bitcoin. This is 1 week. I want to put this in perspective here, because when you see 70,000, you're like, okay, that seems like a good amount. But all right, if that were to happen every week for the next year, all right, that's almost 3.7 million Bitcoin. All right, that's almost 20% of supply, assuming the price of Bitcoin just went sideways the whole time. But that is massive. In 1 week, right? This is an explosion of the amount of Bitcoin starting to change hands. And I think I heard Benjamin talking about it on these OTC markets, that they're really just trying to source Bitcoin. And they have to be scrambling, because where can you find that amount in the market? Like, it's not just the fact that, yes, Bitcoin supply, it's out there. It's in people's wallets and cold storage. It's the willingness to make that trade. How many Bitcoin are willing to be traded at this current price? Right? It's not tens of millions. It's not millions. It's probably hundreds of thousands. And how much has been eaten up over the last few weeks? Right? There has to be a tipping point that's happening right now in this market with the amount of Bitcoin that is flowing and changing hands. I don't think I've ever witnessed essentially dominant players like this, essentially relative to the rest of the market, be so outsized. And of course, you also have miners that are trying to accumulate Bitcoin. Like, I don't have that even on this flow chart.
Yeah, I was going to say there's to your point, I think I saw Mara just bought, I want to say about 5,000 Bitcoin. And then I saw there were other companies much smaller than MicroStrategy that are following the same path, using public debt to be able to accumulate Bitcoin as well. So to your point, as you start to add that up, you've got this massive demand for all the Bitcoin.
Yeah, I mean, since the since the election of Donald Trump, you have to imagine, and I'm almost curious about running these numbers for next week, but we should be running into the hundreds of thousands in terms of the amount of Bitcoin that are flowing into these entities. And I mean, when does that stop? Like, you don't have that much in the market. There is, and I'm sorry, you just don't, right? There's just not that much hitting the supply side of that book day in and day out. And I'm going to say something that I know I'll probably regret saying this at a later date. All right. So we're getting a little spicy here. But if the tide falls out, somebody's going to be sitting there naked. Right? Somebody is rehypothecating supply here. The amount of Bitcoin that's, being stated, that's being accounted for, I don't think that's fully there, right? Because these amounts are just so outsized, relative to what we're seeing on the price chart. So there's something taking place. I don't want to say there's hedging unfolding, but maybe there's some sort of synthetic exposure that was created for Bitcoin. Because I can't wrap my head around why the price right now is just, barely over 100,000.
Well, when you say that, what's your perspective on the impact from a market point of view? Obviously there's, just pure law, fair. I'm not sure what the term I would use there is that, it's unlawful, right? In most of these cases, you're expected to, especially the ETFs, right? They're required to have those ETFs on their book. I'm not sure if they have the opportunity to then re-lend that out, right? Are they then becoming part of that rehypothecation machine? I'm assuming that they're not allowed to based on the structure, but I haven't looked into it. I'm not sure if you have as well. But
I have not, right? But I guess that's not really fresh supply being acquired. It's just being borrowed until it can be sourced in the market. What are the secondary effects of that? And somebody's going to have to pay out of pocket for that spread. And how do they pay for that? How does that show up on a balance sheet? I'm not sure, but just as Benjamin was mentioning, if somebody needs to borrow Bitcoin for a week or a month and they're paying 5% APY on that Bitcoin, that Bitcoin has to be replaced by a spot purchase. Right? It's not just that hey, okay, I met your, and maybe this is right. Maybe that 4 or 5% annualized rate gets baked into some sort of fee that's happening. But then who has that kind of last claim on that asset? This creates a little bit of a daisy chain effect. But these things are definitely taking place, right? There's just too much money flowing in so fast that you just literally cannot source that amount that quickly. So it's, I don't know how this plays out in the next few weeks, but I think on a monthly basis, you could almost think of this as letting the air out of whatever strategies taking place right now on these books, that it will just slowly kind of let that out, let the price run as it's supposed to, and find sort of that new equilibrium that should be here right now in front of us. And I don't think it's a bad thing in terms of the longevity of a cycle, right? In terms of price appreciation and you sort of want this to be drawn out. You don't want this to just be kind of like that 2013 double top where everything was moving so rapidly and it was such volatile conditions that there really was no opportunity for any other narrative. I know there wasn't much going on. Oh man, I'm trying to think of what coins were in existence back then. But if that were to happen right now, you wouldn't really have the ability for these other narratives to gain footing and really breathe and run, right? But if Bitcoin's able to kind of run, methodically, week to week, 1%, 2%, 3%, at a clip, that bodes well for the rest of the market to to really just stretch itself out and try to garner capital and attention. So it's not the worst thing here, right? As long as what is being stated, that Bitcoin gets behind it. I think right now, there's somebody that is, playing around in the gray area here.
Yeah, hopefully, to your point, when the tide rolls out, it can be done some way in a tidy fashion rather than everyone just being exposed and having a violent change in the market. But I'm sure the TradFi people would love to see that because they would claim that they were correct all along. But
absolutely, yeah. I mean, look at this, like far side investors, like just nice, easy way just to view it, and it's just steady, chunk after chunk, coming in. I remember seeing yesterday's numbers come through late, and it was just like, wow, 400 million, 100 million. Like, this is not letting up. This is not losing steam.
Yeah, and we had this conversation just, I want to say, in maybe August or September of this year, talking about when I think we were sitting in maybe 2021 in net inflows, and we were talking about, and maybe it was even less than that, it was 16, and we were talking about the highest target for this year was 24. That was like the nosebleed section of the highest we go. We're now at 35, 36 billion. And it feels like BlackRock has a sales machine that is unmatched by anybody in the industry, whatever you want to think. And it's not slowing down. The pace of it is just it's mind blowing, frankly.
Yeah, and you have a little bit of their hands being shown, because they're almost saying, you know what, maybe 1%'s not enough, maybe 2%'s pretty good.
Yeah.
It's just alluding to the fact that this is just absolutely, making their holiday paychecks here. And so now they're thinking to themselves like, well, we got to get more. How do we get more? Oh, maybe we just change this recommendation. We just bump it up, okay. So now all these portfolio managers are going to start, for those who do have exposure, just inch it up a little bit more. Okay. Increase those flows. And that is just responsive to the fact that, this thing is crushing it. People are resonating with it. The returns are there. It's got mind share on CNBC. People are asking for it. So it's just, you're going to continue to see these flows, it seems like, for quite a bit.
Yeah. And there's a lot of discussion about the fact that while the ETFs are live, a lot of offices aren't offering them today. And I don't even mean Vanguard not offering it to its customers. I mean, like the smaller shops, I think they call it the wire services, sort of these endpoints where they can actually offer this. And recently I went through an interesting experience talking to a broker who's managing some funds for a fund, or some clients I know, saying, listen, we can move you into MicroStrategy. We can buy up Mara. We can't buy the ETFs yet unless we make some changes to the account. So if you want that exposure, we can't do that. We have to consider that higher risk. And they're actually able to do that, but some of these aren't even online yet. And there's some, I think from Bitwise, the CEO of Bitwise was talking about the fact they expect the flows to be even higher in 2025. Now, I look at that and I think about the chart that I just saw from you. How much longer can this go? You have the one from Farsight, but then even looking at the one, just the accumulation in 1 week, 70,000 Bitcoin. If this doubles in 2025, it feels like either the price is going to have to equalize at some point, or this ends up being the euphoric bubble that I was asking the guys about early on.
I think where we can look is going to be, you see Grayscale here. For some reason, people are still showing up and allocating some capital to Grayscale, but some of these flows are originating over here. And as we see this start to dwindle further and further, that's sort of tipping the cap to like, we're getting close to either sort of that euphoric last push in the market as all that supply starts to dwindle, go away, because now it's like, where are you going to get that next Bitcoin? Which is kind of what we're alluding to here. Like, there's just so much demand right now relative to like who's a willing seller at these prices still, right? Because this has been going on now for a couple of weeks. Like, who is still left? Who has that much supply that they're willing to kind of let go, given everything else that's taking place? in Grayscale, there's flows that are essentially just going from one pocket to the other. But once that starts to dry up, right, they're out of pockets and they got to go to the market begging for source. So, I mean, this could go on, I would think, for much of Q1. And if you have those tailwinds that Trump's going to provide, relative to Bitcoin specific, there's no reason that everybody else won't kind of jump into that bandwagon. And we're talking just like your everyday individual. This is no longer the smarter money, right? We haven't trickled down into, every I don't know what kind of phrasing is okay to say nowadays, but Jack and Jane, if you will.
The Main Street money. And the game theory there, which I don't want to get too much into it, but the point is that a lot of the discussion can happen around this idea of a strategic reserve. I think there has to be legislation in the U.S. It's not a done deal at all. But what I'm already seeing is that government officials in other parts of the world are talking about it, and just the speculation around that could be very material for accumulation. One of these by the news type of things. Or by the rumor, I guess, by the preparation, which I'm not putting any kind of bias on saying it's good or bad, right? But just more the reality that this could certainly start to move the needle. From your perspective, from a flow point of view, I mean, obviously, just a tremendous amount of demand. What else are you looking at from a Bitcoin perspective? I mean, has anything changed from an actual usage perspective on chain? I know that's something that we talk about frequently. Everyone's very excited to see the price go up, but I mean, actual usage of the chain seems to has remained relatively muted. We saw some stuff with ordinals, we saw some stuff with ruins or this year, and we're seeing some with the NFTs. But overall, it feels like it hasn't quite picked up.
Well, I mean, over the last week, there has been some, I mentioned Babylon earlier, that absorbed quite a bit of Bitcoin over the last week. And what happened over there is they opened up their cap to allow, I forget how long it was, like 1,000 blocks to go ahead and start depositing Bitcoin relative to Babylon. And so all these kind of liquid restaking projects, such as Solve Protocol being one of them, they've been absorbing a lot of that flow and then kind of setting up shop on top of Babylon to go ahead and run their operations. And this ecosystem, you and I have been watching this for quite a bit and kind of keeping our fingers crossed to really see a narrative stick, because it's so important for this collateral Bitcoin to be used more on chain, just from kind of a healthy network perspective, to have these fees kind of outpace the amount that's being realized from emissions. And so if you can cross that amount right there and become healthy enough where it becomes a sustainable amount even without emissions for miners, like that is just, this thing is off to the races. And that when that moment hits, it's like, why are you not sitting on Bitcoin network? So, you and I, we've definitely been watching this, hoping to see one that just really intuitively it feels right. The UI is there. The UX isn't like a terrible experience, but I mean, we're still trying to get there. But so Babylon, it absorbed quite a bit. Cap got lifted right beforehand. It was just under 24,000. And just as of yesterday, we're already at 56,000 Bitcoin on the whole showing up over there. And a lot of this has gone to Solve. And what Solve has been doing is kind of creating this experience to go ahead and take advantage of a lot of these DeFi applications that exist across ecosystems. Okay, that's important to know. Like, this is not Bitcoin specific. Like, they're even running essentially a certain type of strategy over on Solana, I believe on Jupiter, because that's sitting over there. Yeah. And they make reference that they've run this strategy before. I think on GMX, they made mention of it in their docs. This isn't like a native yield, right? This is sort of just like this yield strategy and sort of instrument to go ahead and earn this. I think they reference 20% yield on your Bitcoin. And so, there's definitely some risk there. They have Athena connection there. And if we actually click on DeFi, I think we can see a bit more of kind of they're across various ecosystems, but more importantly, there you go, yield market. They got Pendle, I believe, set up, GMX, which I made mention earlier. But you can see, right, like they're involved across the ecosystem. But what I think is important to note here, like, it's great that we're adding these new layers for somebody who wants to stay in Bitcoin and earn that native yield in Bitcoin to go ahead and gain this exposure of other networks. Like, I do think that's great. I just wish it was sitting more natively, on Bitcoin, and that fee accrual and realization can be had. Unfortunately, like, it's not happening there. But I will say, when it comes to Solve, the team's done, it seems like they're moving fast. It seems like they've done a lot of work to create all of these connections. I'm just a little worried that there's a lot of, I want to say, almost tech debt that's kind of starting to add up over here because of, like, they have different Oracle solutions that exist. I believe they have Redstone and they use Chainlink. They have to manage assets over on Jupiter. I don't specifically know how they do that, but you can see, like, this isn't just like a unified approach to yield across the board. It's sort of specific to whatever area that they're building that connection to. And for that reason, I'm have concerns. But if somebody's trying to just play the Babylon points games and Solve points game, staying specific to those two, I think you would at least lessen your risk in that marketplace, because Oracle risk is real. And nobody should underestimate, like, kind of the consequences that can unfold depending upon which Oracle is being used for whatever strategy that you're being involved in. So just, take that with a grain of salt. But, for now, like, this is sort of how Bitcoin's being used in this ecosystem. I would like to see, essentially these AVSs, these active validator services, starts to spring up, and people wanting kind of this most secure asset backed by computational power of Bitcoin. And, essentially you have this market that's competing, whether people want to go ahead and have this security with, Bitcoin backing or Ethereum backing and validation over there. That would be a really incredible marketplace. This would be the AWS marketplace of kind of Web3, if we could see that. And, fingers crossed, but I don't think the demand is rich enough yet. The offerings aren't there. So we're getting there. But luckily, we're seeing the capital flow. Clearly, the market is demanding this for how much capital is flowing into these offerings, even though it's just really a points game right now, for the most part. But yeah, that's kind of Bitcoin's on-chain flows of late. It's good. It doesn't seem like it's slowing down. I don't know how many blocks it's been since then, but looks like it's going to keep going on here.
All right. Well, Bitcoin has a good story then for some period of time. We'll have to see what 2025 brings, but it feels like Santa Claus is going to deliver something good. All right. Well, unless there's something else to mention about Bitcoin, should we get over to Ethereum, which feels like it wants to punch higher, wants to get some movement. And, we had some of the communication going back and forth on Athena. I'm not sure if we'll be able to talk about that today, but it feels like we're building up for a very good year for Ethereum. And I don't just mean price. I mean, I feel like it's possible that we start to get a lot of demand coming back. I think it's been what's the term I would use? Like, the social RSI is at an overhate levels on Ethereum. So. But tell us, what are you seeing from a demand perspective or supply perspective? That's kind of caught your attention.
Yeah, I mean, it's definitely been pretty, sentiment-wise, very negative. And, a lot of this, I think, just has to do with just fees, just not creating that demand loop that, you would almost expect on an ecosystem like Ethereum. I think we can see right here, like you can see over this time period that this is just over 7 days, but if I were to lengthen it, 30 days, I don't want to go too far out because things start to get wonky, but my guess is this is March right here. right? And you can see essentially the amount of new supply hit in the marketplace since the Denkun upgrade back in March. You kind of see in supply, really change its trajectory. I don't imagine that being the case too much longer here. And the reasoning behind that is the demand for L2s is really starting to pick up. And some of that demand is starting to show up on the L1. And we can kind of see that when we start to look at, let's see, if I go to 30 days, does it? Okay. So you're seeing decent jumps above kind of this, they call it the ultrasound money threshold, which is when things start to burn. Whatever, you can make of it as you will, but
right.
You can see the ebb and flow happening, which is good. But you also see down here, you see life, right? Like this is actually coming to life, the blob fee market, which is just market that's just dedicated to L2s. And you're seeing, this isn't like WEI units. This is GWEI. And the fact that we're seeing like healthy amounts here is good, right? We did not see that, back in May, June, July, August of this year. But over the last month and a half, like it's just starting to come to life. And so why is it coming to life? Because L2s are starting to get a lot of flows. And that's kind of what I want to touch on today. Like a lot of people they'll take this Artemis chart and they'll look at Ethereum and be like, oh my God, everyone's leaving Ethereum. Like it's so over. But then you look at the top and you realize, okay, maybe the flows are going, it's actually within the Ethereum ecosystem. It's moving to Base, it's moving to Arbitrum. Like these are significant. And so if we're starting to see L2 activity pick up, you're seeing flows start to show up over there. Like this is setting up for a sustainable kind of growth period for these L2 ecosystems because, fees are lower over there, right? If we go back to the previous cycle, when fees started to spike on mainnet, a lot of that capital flowed to EVMs, alt L1 EVMs like Avalanche and Binance, and eventually Phantom, and some smaller ones. And they kind of ran a similar playbook, but that was because it just got so expensive on mainnet. But you're already seeing capital flowing to L2. So now in this cycle, there's the opportunity for Ethereum to essentially still be relevant when fees start to rise in a way that it wasn't in the prior cycle. So if we're seeing a lot of flows move to Base and Arbitrum of late, what's going on over there, right? Base, you do have this ecosystem with virtuals and AI agents starting to surface. If anybody's been tracking liquidity over on Uniswap and Airdrum, like it is picking up, especially Uniswap. Just over the last month and a half, we're seeing liquidity levels move to levels that warrant like sizable movements by individuals with minimal slippage. That didn't really exist. Like, I don't think people understood how fragmented and shallow liquidity was in some of these L2 environments for certain tokens. But now you're seeing, tokens even just outside of ETH now have sufficient liquidity. So that's a big positive. And Arbitrum.
I just want to ask you, I mean, as someone who is very excited to see where this ecosystem can go from the future of finance, the future of money, are you seeing the starting point of what you had hoped to see maybe going all the way back to 2020? I mean, there was a lot of, you see the protocols come online, you see a lot of emphasis and interest, and then everything, obviously, we have a bear market, everything goes down from a price perspective, but I think also some of the demand got let out as well. But now as you're starting to see this, L1, L2 ecosystem emerge. What's your take on that? I mean, is there a part of you that just gets excited and say, hey, this is actually happening?
No, right? Like
Ethereum, no, okay, all right. The opposite.
Like it's Ethereum has a track record of just trying to find its, next foot to shoot. And I have no doubt that it's going to figure out a way to do it probably halfway through. I mean, whenever this Pectra upgrade, luckily this gas limit debate has kind of throttled back because everybody wanted to double it. And it's like, well, why are you trying to double it on the mainnet And you're also going to allow more blobs kind of come into the market by adjusting your target from 3 to 6. Like, you're going to double your target on both sides of this equation here. Where's the demand? Do we know the demand is going to be there? And so if you're going to go ahead and change essentially the supply of block space, like, you're not being responsive to the demand side at all. So when demand starts to wane, which it eventually will, especially in 2026 most likely, where does that leave, the demand for native ETH, like, as a commodity? Is it still going to be relevant? And I don't think anybody's concerned about that. Mostly because there's been just so much, mudslinging taking place that people just want to just increase the amount of everything that runs through that chain. So we'll see, right? We'll see. I know that's a lot, but that worries me. I want to see the chain abstraction really come into the mix here with this next upgrade. And to me, if the fact that it's going to happen is one thing, right? But then how are the toolkits? How easy is it going to be for a developer to incorporate it into their already existing solutions? Like, that's another question that we don't know until we really see it. But if it is pretty simple and we're allowed to essentially, from a developer side, basically sit on one L2 chain and then touch liquidity across various chains and even mainnet, that matters. Mm-hmm. And if we can get to that level, then I would be excited. But as of right now, I don't see it being that easy. I don't see it being that efficient. I don't see it being like the uptake by the development community to be just like, hey, it's here. Okay, next week we're gonna put it into everything. And it's like, not so fast. Like, you're gonna have a lot of people don't understand, like, from a developer side of like, okay, so you have this new kind of EIP that comes through. Okay, it's chain abstraction. How does it work? How's it going to work for my particular use case? Like, where are the vulnerabilities here? If we're going to go ahead and do a swap and it's going to happen and look at liquidity across various chains, like, what happens when it starts to flow in? What's the MEV going to look like? How is this going to be like truly beneficial to the end user at the end of the day? Like, nobody quite knows that, right? But you have to run some testing and it takes a while. And then it's like, is this actually going to be like a magnitude, order of magnitude change relative to what current users are already used to? So to be excited right now, it's hard, right? Yeah. But I think if there is to be some excitement, one thing that we can see right here on this flow chart is that Arbitrum over the last few weeks has been getting some flow, and sort of talking to some of the analysts at JLabs of just, why do you guys think that's the case? And some of them are just like, well, I mean, base is kind of getting like a little too heavy in terms of like just trying to get a transaction through. And so Arbitrum is just kind of a healthy little ecosystem. And it's like, whoa, so you're telling me like the overflow of base is hitting Arbitrum right now. So it's almost like, I don't want to say base is hitting saturation, because I think they'll figure that out in time. But, Arbitrum is capturing kind of what would in the last cycle be an outflow to something like Avalanche or Binance Chain. So that's an interesting observation. But one thing I wanted to hit on was to actually look at kind of like, where is this capital going on Ethereum? And this is where, our cutting edge UI chart making capabilities really show themselves.
People have no idea how much money has been invested in this.
Just too much, right? Yeah. Too much.
Sexy looking tables.
Yeah. So on base here, we kind of just looked at some of the top wallet holders just briefly. This is kind of a practice we do with a lot of different ERC20s, Ethereum ecosystem at large. These sort of insights, you'll be able to see time series versions of these in Panda. Some of it's already there, but we're expecting a pretty good push next week for some of those things there. So if you do have access to it, you'll be able to see it. I believe it'll be called on-chain usage or token usage in the terminal, and you can check that out. But for here, I made the table just so we can kind of see. But as far as like how is ETH used on Base, you can see it's predominantly just centralized exchanges, which just means that they're willing to go ahead and move ETH back and forth in a cheaper environment. So that's, it's sort of positive, I would say. It's not the greatest use case you want to see. You don't really want to see all these centralized exchanges at the top of the list, but it is what it is. But when it comes to ETH, like you have to wrap it to really use it to various protocols. And so that's when we look at wrapped ETH and we see, we got 27,000, 16,000 here. And so if you look back up at the top, like it's sitting there kind of in the top 10, healthy in the top 10. You see Morpho Blues there. Aerodrome, like I mentioned. Moonwell, I'm not that familiar with Moonwell, but you can see like there's a lot of pools that are showing up, which means there's sizable liquidity for ETH. And you also see, and this is what I think is interesting here, and what I think is kind of touching on a bigger trend, and it has to do with lending and borrowing protocols. We're seeing a lot more flow into those solutions, whether it be Arbitrum, Base, and even on mainnet. We're starting to see a lot of individuals allocate capital to what was essentially a lending pool that just didn't garner much yield. And we're kind of entering in this new, I don't want to say it's a new paradigm, that's too cheesy and cliche, but there's enough yield now showing up and enough demand for that asset that we're starting to see a lot of supply get allocated to these pools. So what does that mean? It means you have more ETH that is getting allocated into these pools that are essentially, untouched. And we think of it as like this profile of like how liquid an asset is. Lending and borrowing is very illiquid, right? That collateral is sitting there, and it's not something that's going to be liquid in terms of a swap, right? Nobody's swapping through and entering or leaving that asset. This is sitting there, it's untouched, it's acting as collateral for likely some sort of stable coin that's being borrowed. So this just makes, in terms of liquidity profile standpoint, this is a bit of a reflexivity effect that's taken place, where more transaction activity is creating essentially higher yields, and it's greater demand. And now ETH is becoming this collateral that's getting locked up. And similar to what we were just talking about with Bitcoin, we're seeing this now, these flows happen with ETH into these more illiquid environments. And so I don't see this trend stopping, right? I see, if anything, it's going to accelerate a little bit. But again, you see a lot of Aerodrome out here. So this has to do with just greater activity showing at Base, more collateral showing up at Base to really service this. But what's happening now is that yield aggregators, I think, have built their connections to these L2s in such a way that now you're going to see assets moving into these other pools to go ahead and garner that yield. And so as the demand for these lending pools start to rise, you'll see capital start to flow in response to it. So it's almost like this concern around liquidity fragmentation that exists is these aggregators are starting to provide the service to go ahead and sort of reduce those issues to a degree. So it's a nice flywheel effect that's taking place.
So just to summarize there, you're seeing, even though liquidity is highly fragmented today, the aggregators are providing a layer to reduce that friction across the ecosystem. It's not perfect, but it's moving in that direction.
Yep. I've been constantly just kind of seeing these updates for some of them of just like, hey, we just added this connection. We just added this protocol. And so it's kind of, once I saw this, I kind of realized like what was happening. Kind of once you take a couple steps back, like if you look at Morpho Blue here, I think this is Morpho Blue. Yep, like right over here, I think I pulled up Base here just for people to understand, like this is the growth of kind of TVL. And some of this has to do with just the amount of ETH going up in terms of what, 50% since the election. I believe like it's some of that has to do with that price appreciation, but a lot of it has to do with just, oh man, I just screwed up this chart. There we go. That's US dollars as well. US dollar inflows. You can see there's definitely significant flows happening for Morpho specifically, like I just showed on that beautiful table. That Morpho is one of the top ones with wrapped ETH. So that's good. Then you also see in terms of flow perspective, Athena. What's an interesting dynamic over there is that you really see the big pushes when ETH makes that big jump on price movements. Like right when it makes those big jumps, people start to go ahead and get ahead of themselves, and a lot of long positions, funding rates start to rise, and then you see ETH flow into Athena. And so we've kind of had a bit of a volatility suppression. Funding rates haven't been that crazy, so you kind of seen these inflows slow down a little bit, but now you're starting to see them pick up on lending, which is good.
So just to summarize what you're seeing here from Ethereum perspective, it sounds like the negative side of it, where there were going to be changes to the proposal that was going to be increasing the blobs size, or at least the maybe the target, as well as some of the pricing side of it. If that cools down, you're not seeing changes to that, and then you continue to see this kind of adoption. It sounds like it's a fairly bullish setup as we start to head into 2025 for Ethereum.
Yeah, it's almost like the way that I would kind of explain it. It's like you see it gaining momentum, right? You kind of hear the engine firing up, and you can kind of, like, without seeing the engine that's there, like you can kind of hear it. It's like, okay, that's pretty powerful. Like it's just warming up. Like this is not, up on the RPMs. We're not getting anywhere close to red. And if we can think about how much this thing can push, there's a lot of flywheels in place. People underestimate that. Like we're just seeing some early movements of essentially autonomous flows of capital based upon how yields are showing up. And you don't really have even institutions starting to try to capture some of that. So it's an exciting moment. And I know earlier you asked me if I was excited. From watching the flywheel and the flow perspective is exciting, right? But as far as like Ethereum shooting themselves in the foot, that's less exciting for next year. So it's, two sides of that coin there.
Yeah.
So,
okay.
Yeah. Big picture here, you see L2 demand starting to show up. That's great. They lacked that last cycle. Some of this is showing up on the mainnet. So once mainnet does finally start to ramp up, those fees get a little bit, prohibitive to make some transactions. You have L2 set up to capture that flow. You're kind of seeing that to an extent. You're seeing a lot of liquidity, move to where it's needed already. And so that reduces some of the fragmentation and thinness of liquidity concerns that exist. So it's set up for success for a long run if it decides to really rear its head, which I do think is happening. It tends to happen every cycle. This is going back to the start of the show with the video that I made over a year ago. Just Bitcoin makes its run, capital will then flow into, in a post-halving environment, it tends to flow into Bitcoin in the weeks after you kind of have Bitcoin make that liquidity move that it did during the election. It's usually around 6 weeks after, which, we're like right there, right? This is historically, this would be the week when it tends to happen. So we'll see if it takes place.
Let's see if history repeats itself. Okay, so we've got Bitcoin down, which again looks like it's headed for a supply shock. We got Ethereum that's starting to rev up the engine, and then we have Solana, which I think is looking for a new narrative. Are we ready to go in there? Is there anything else you want to summarize on the first two?
Do we have to go there? That's my concern.
We don't have to. If there's nothing new, I mean, last week we did a pretty good kind of state of the flow network, and Solana really, since we've seen the pump.fund come down, is really looking for a new narrative to kind of grab some of that. We saw it on the price chart. It looks dead. I think the comparison is it felt like Ethereum from 6 months ago, which is not a good sign. Is there anything, I guess, that you'd want to highlight from a Solana point of view?
there isn't much new to say at the moment when it comes to Solana. And to be fair, I didn't do like a ton of research before the show for today, but fees are down substantially, and a lot of this has to do with sort of just attention is moving a different direction. The attention that a lot of the Solana ecosystem did have was transient in nature, and so we can't expect that to be super sticky, right? We have to realize that when that attention does start to move, like it's gonna move quick, and it's not gonna just show up tomorrow. Like there needs to be something that really brings that attention back. And looking at the pump.fund stats, I can share it on my timeline. Like it's still trending in just not the right direction as far as new tokens being launched and the amount of revenues that are going to be realized. Looks like it was a nice little spike here yesterday, or for some reason, there we go, 16th. Yep, decent. But it's not really accruing down back to the main net, to layer one. A lot of people, when I talk to them about Solana, they always reference Fire Dancer. And I just want to put that into context, because if Fire Dancer does finally like make its way into market, this is going to increase a lot of the transactional activities and reduce the fees. And if you look at this fee chart, fee and price tend to go hand in hand. As fees start to rise, price tends to rise along with it, until you hit this like inflection point where the fees are getting so prohibitive for transaction activity that people start not doing it anymore. And this has to do with, like, say, inflation for an economy. Like their prices are just getting so high that you can no longer, pay your employees the same. You can no longer, buy as many groceries at the grocery store. And so then the economy goes into a recession. Okay, Solana is sort of in a recession right now. And this is case in point. But what does something like a Fire Dancer upgrade do for fees? I just keep that in mind, because this is sort of that. I don't want to say it's necessarily a mistake, but I think, a lot of individuals that are trying to just scale, like get as many transactions into the blocks as fast as you can, just up the hardware and just keep pushing. Like, where's that demand? If the demand's not there and you have all of this supply, okay, and there's just so much supply and the transaction fees are just, insignificant, where's your fee capture at that point? So you have to balance it. And I think a lot of developers tend to just not weigh the two and kind of develop and push updates out hand in hand with those things. But that is a concern. But one thing that I am excited about when it comes to Solana is, I was trying to pull up the news piece and I can't find it, but I believe the individuals behind STEPN, I think, they went ahead and acquired a company that had some licenses already under their belt, and that had to do with these regulatory licenses to go ahead and essentially hold shares, I believe. And really, what's coming in Q1, is my understanding, is that Wrapped, Tesla stock, and I think Amazon was the other one. I believe there was two stocks that they were talking about to push first. Those will be hitting Solana. Now, a lot of individuals that came to Solana over the last year and a half, 2 years, might not realize the fact that Wrapped stocks already existed at some point on Solana, way back when. Believe it or not, I remember Solana when it was sub $3 and trying it out, checking its ecosystem out, and then SBF took over. Wrapped Solana was coming, right? I'm sorry, not Wrapped Solana. Wrapped stocks were coming, and it wasn't just Tesla and Amazon. It was like a few dozen stocks, and it was going to be traded on, I forgot which exchange it was. You would KYC. I think they were working with Civic at the time to go ahead and enable that KYC kind of NFT, hit your wallet, and then you can trade as much as you wanted to. That was coming, right? Now imagine a sort of environment where you can have some of the more popular stocks show up on Solana. Like, that is a perfect match right there in my mind. And so now you can have essentially all these composable elements where, yes, you're using Solana to make these transactions, but now you can take your Tesla stock, you can go ahead, borrow against it, and maybe go, buy some whiff or something. But that to me is really
that's a very
fun.
interesting use case. Yeah.
You don't dream of that?
No, well, yeah. I will say, but it wasn't whiff, it was bonk.
There you go. The truth comes out.
The truth comes out.
To me, that is a very fun ecosystem that's going to come about, especially as you have all that additional tooling come about. It's almost like a race between them and Hyperliquid, like who can build like the secondary elements faster, who can bring in stocks and all these other toolings faster. Like I could see those two just competing head to head for a while. And I know Hyperliquid has got a lot of mind share right now. I think I'm really positive about it, but it's got a lot of ground to make up to try to compete with Solana. Like I think Solana is going to just dominate that sort of fast trading environment game. They always say NASDAQ on chain. Like it seems to be the clear winner in that regard. And once those wrap stocks show up, I'm going to be really curious about some of those solutions and how they work across the ecosystem. Fees going to go through the roof. Just could be a lot of good things ahead there.
There's a really interesting set of use cases there that I think people are very creative. I agree. I'm very excited to see how that shows up and what that looks like. So more to come there, but Solana looks like it's got as you said, a nice way of framing it. It's in a bit of a recession, needs to see some growth. Let's see where that comes from.
It should be, right? It was so hot for so long, right? This isn't a bad thing. It's not the death of Solana. Like I think a lot of people will maybe hear these negative comments on Solana and be like, oh, Ben's just saying like Solana's dead, it's over. It's like, no, just, you know what? Attention is going to go somewhere else for a little bit, right? Like Solana's not dead. If anything, just watch out for the next thing that's going to come, that's going to bring this thing back to life, and it's going to rip again. I have no doubts about it. But, right now it's just the fees are dropping, the attention's moving, and, it's having a little bit of its own kind of existential crisis as it comes to MEV, but it's a different story. But yeah, long story short, Solana, attention's diverted. Ethereum, L2s are getting some flows. Demand's starting to pick up just a little bit, early innings. Bitcoin is just flying. I don't see how it slows down anytime soon.
There you have it, folks. State of the flow state for all these networks that matter. All right, Ben, thank you so much for coming on, and thank you for all those who joined us live today. We love having you here. Remember, you can always join us live, ask questions. If you've got specific tokens, we can see what we can do to answer them. If you got questions about the flow report, anything that you want to clarify, definitely join us, ask those questions. We'll see what we can do to answer, and we'd love to have you here. You can obviously hear that we think 2025 is going to be extremely bullish. There's going to be a lot to navigate, trying to block out all the noise and get to some signal. That's what we're here for at the Trading Pit. So we hope that you'll stay with us and bring others along this journey. We're definitely excited to be doing it next year. With that, we're going to wrap up this show. I will leave you with my PSA. You just heard about some opportunities. There's going to be more coming. Always have some dry powder ready to deploy, whether you hear from us or someone else. So you're ready to take advantage of these markets. I am Marconi White, signing off.